I've always wanted to own some real estate, whether it is a house, apartment, or anything else. The idea of having a piece of ownership on Earth in a limited land was one of my biggest goals when I was younger. But I grew up now, as well as my knowledge, and I've owned stocks for the past few years now, and my point of view also changed. Hi, Jarod here, and today let's talk about real estate. So first, let's talk about the differences from the good to the ugly and which stocks would be a buy right now. First, it is more diversification. Unless you are super rich, you cannot own properties in Paris, San Francisco, Rio, Amsterdam, and all other great cities of the world. But with stocks, you can not only invest in different countries, you can also invest in various sectors, which most of the time protects you from recessions and thus minimizing losses while maximizing gain. Because all sectors do not behave the same, there is less chance that your entire portfolio goes down at the same time. For instance, people will always need products of daily necessities, so Procter & Gamble or Walmart would be a good choice, I think personally. As you can see, Walmart went up when Disney went down during the pandemic. Difference number 2, it is less work for you to own stocks than real estate. Having an apartment is like having a part-time job. You will have to find houses or apartments. That means take the car, bus, train, bicycle, or just walk. But most of the time, your real estate investment is not located where you live. You will then have to meet tenants, probably multiple times in the year, even dispute with neighbors, and maybe do some renovations and maintenance on top of that. Real estate will keep you busy. And on the other hand, stocks can be tucked away and left to collect dividends so that you're able to focus your attention elsewhere, such as spending time with family, your business, or traveling the world. Real estate will cost you time, when the stock market will allow you to have more time in the long run. Advantage number 3 for the stock market is the ability to invest in products you love and, well, also worth the price. This is the fun aspect of the stock market. Apple fine? Right. Buy the stock, own a piece of the company, or McDonald's cheeseburgers fun, maybe, buy the stock again. It's a great feeling to not only use the products you invest in, but make money off your investments as well. Small disclaimer here, it's not because you buy your favorite stock that you will make money in the stock market, but doing enough research on the business you love will push you to hold your stocks in the long term, even during recessions. So for instance, I love Microsoft and I own their products, which help me become more efficient in my day-to-day life. I've done some research and found that the company has been paying dividends continuously for more than 17 years now, with a current dividend yield of 1.15%. Its income increased by an average of 98% a year for the past 5 years, with a good increasing return on capital of 22%, which are two solid numbers, I think, worth the price. Okay, advantage number 4. It is easier to protect your investment during a downturn in the stock market. Let me explain. You want out of stocks? Just press a button. You want out of real estate? It can take you dozens of days to finally sell your properties. But with stocks, it is so nice to be able to simply click a couple of buttons and be done. Simply because prices are going down, and no one knows if the falling knife touched the ground or not. You might even need in emergency the $200,000 invested in your new house, but you won't be able to withdraw the value in a day. Whereas, let's say you have $200,000 worth of Apple shares, you will then be able to sell everything in a blink of an eye, or buy even more shares if you want to, and if the stocks are down, it's up to you. Then there are the costs related to maintenance, insurance, property management, etc. With stocks, you can build a portfolio of ETFs or exchange traded funds for free on the broker of your choice. You might be thinking about Robinhood if you're American, Trade Republic or Trading 212 if you're European, and so on. And along with more work comes higher costs. Alright, now the debate is over, and let's see what stocks would be a good buy. And first, I will say Realty Income. Realty Income is a real estate investment trust that invests in real estate, you guessed it, in the United States, Spain, and in the United Kingdom. The corporation was founded in Maryland and has its headquarters in San Diego, in California. The firm is one of the few real estate investment trusts that pays monthly dividends rather than quarterly payouts, and it has filed a trademark for the slogan, the monthly dividend company. The company has been paying dividends continuously for more than 26 years now, with a current dividend yield of 4.94%. Second company, W.P. Carey. The company is organized in Maryland, with its primary office in New York City. The company owns close to 1,200 properties in 25 countries, leased to 345 tenants, and approximately 64% of the company's revenue is derived in the United States alone and 36% in Europe. The company has been paying dividends continuously for more than 22 years now, with a current dividend yield of 5.76%, and its income increased by an average of 13.6% a year for the past 5 years. Okay, the third company is Digital Realty Trust. It was founded 18 years ago, and it is a real estate investment trust that basically invests in data centers and provides peering services. I think that is highly interesting. Okay, so the company owned interest in 225 operating data center facilities, totaling 44.5 million rentable square feet in the US, Europe, Asia, Canada, and Australia. The company's largest operating areas are Northern Virginia, Dallas, Chicago, New York State, Silicon Valley, and London. The company is a member of the Green Grid and has helped pioneer concepts of energy efficient and energy conservative data center design. It has been paying dividends continuously for more than 16 years now, with a current dividend yield of 4.75%. Its income increased by an average of 80% a year for the past 5 years, which is enormous and which is more than solid also. Okay, so the fourth company is a French one called Gecina. It was founded roughly 63 years ago in 1959, and it basically owns real estate around Paris, to make it simple. The company has been paying dividends continuously for the past few years, with a current dividend yield of 6.60%, and its income increased by an average of 98% a year for the 5 past years. Okay, the last company is called CubeSmart. It is a self-administered and self-managed real estate company focused on the ownership, operation, acquisition, and development of self-storage facilities in the United States. CubeSmart operates more than 1,200 self-storage facilities in 40 states, containing 46.6 million rentable square feet. And finally, the company has been paying dividends continuously for more than 15 years now, with a current dividend yield of 4.18%. And its income increased by an average of 22% a year for the past 5 years. Although real estate and stocks have historically performed well, even really well, stocks outpace real estate in return. And alternatively, stocks have experienced more peaks and valleys, making them a riskier investment. And despite their potential to generate sizable returns, stocks have no tangible value. On the other hand, real estate is a valuable, tangible asset and profit generator. So what do you think about this topic about real estate? Do you agree with my choice? And finally, what would be your stock portfolio? Thanks so much for watching. Feel free to leave a comment down below, subscribe if you want to see more, and as always, I will see you in the next one.